Hello, and welcome to the latest instalment of MFS's Conversations with Connor, where we break down the key property news stories and what they may mean for you. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Now, let's get started. Hello, and welcome to Conversations with Connor, where we explore some of the key property developments and news stories of recent weeks. And what a few weeks it's been. June's news cycle has been dominated by the general election, which will surprise no one. Countless column inches, thought pieces, reports have been dedicated to analysing everything about the election, the debates, the manifestos, and all those embarrassing slip-ups. In the property world, we've seen a lot of commentary on how the market will be affected by an incoming government and its policies, whether that's the Tories or Labour or whoever else. There's no doubt that this is important, but what I think may be even more useful for us is to examine how the market will react to the general election when all the dust settles. Here, there are actually some pleasant surprises. Before we get onto the election drama though, let's review some of the key property news items which may have fallen under your radar in June. And remember, if you have any thoughts on what's going on in the news or you'd like us to answer any questions you may have on the podcast or anything else specialist finance related, you can always drop us a line at marketing@mfsuk.com. So first, let's take a look at mortgages. UK Finance revealed that mortgage lending in Q1, while down compared to last year, still shows signs of recovery. The rate of decline that we've seen has fallen significantly from the double-digit contractions we saw last year in 2023. Mortgage rates themselves are also down on an annual basis, according to Rightmove. Borrowers need to move quickly on this, though, with Moneyfacts also reporting in June that the average shelf life of a mortgage product fell to 15 days. Speed, as always, proves to be a key element in the property market. So it's just as well that here at MFS we can have funding delivered in middays when everything lines up. It's also just as important to be as clear as possible from day one of an inquiry. A recent survey revealed an astonishing 81% of British homeowners lack knowledge about the fees associated with buying a home and securing a mortgage. Specifically, higher lending charges, early repayment fees, stamp duty costs. Borrowers are all at risk of being caught out by these. This is why we also underwrite from day one. We never want our clients to be caught off guard by any unexpected or nasty surprises fee-wise. Outside of the home buying part of the market, investors may want to turn their attention to the rental scene anyway. There's a lot of focus on low deposit mortgages at the moment, given how expensive houses are, especially for young buyers. But analysis from Hamptons showed that it's generally still more cost effective to rent than buy with a 5% deposit. Perhaps we'll see rental demand ramp up over the coming weeks as the market wises up on what's actually costing them in the long term if they stick with some of these flashy new mortgages. More people than you may expect need to think about this. 27 Tech's mortgage market report released in June found that searches for first-time buyer options accounted for 18.3% of its queries. That's up from 15.4% in the prior month. Elsewhere, we're seeing promising signs of confidence emerging from the entirety of the property market. Auction demand is still there. RICS, the Royal Institution of Chartered Surveyors, they recently launched a new impartial guide to actually assist investors and property owners and vendors and the like with their choices when it comes to buying or selling at auction. They released this purely because of the demand. It just simply shows no signs of slowing. At MFS, we think this is a great idea, of course. We've got our own comprehensive auction guide available for free on our website for now, so we understand just how important it is, how bidders there. The construction sector also recorded its first period of growth in 2 years in May, with commercial projects leading the charge here. That may sound surprising, given what we've seen with the commercial markets, but it actually shouldn't be. According to Savills' latest review of the UK commercial scene, things are on the rebound. If I quote directly from their analysis, if we look at investment turnover on a quarter-by-quarter basis, we have quite clearly transitioned through the worst. Investment turnover in Q1 was 20% higher than the weakest quarter of last year. So obviously that's good news. And yields in the commercial market actually held firm in May as well. The average prime yield sitting at just over 6%, which isn't too far off the residential market. So still, regardless of what's going on across the market right now, there's only one real development that we're all focusing on. The general election is days away, and according to Zoopla, UK voters have house building, rental reforms, action on empty homes, and the like as top priorities. So where do the parties involved actually stand on housing? I mean, so I'm not going to rattle off the main parties' promises. You've likely seen plenty of that already in the press. And reading hundreds of pages worth of manifestos just doesn't sound fun. But it is worth briefly reminding ourselves of what they've declared so far and what the main points are when it comes to the property market. So the Conservatives plan to build 1.6 million homes, speed up the planning system on brownfield land, tweak the rules to encourage development, and build different forms of housing, especially for older people. Labour plan to build slightly less, 1.5 million homes. They also want to update the planning and policy framework. They want to support local authorities, and they also want to release grey belt land, which is basically, from what we can see, green belt land that is underutilised and isn't as green as we probably imagine it. The Greens want to build 150,000 new social homes. They want new developments to be accompanied by investment in local infrastructure in the area, and they've also got planning reforms in their sights. The Liberal Democrats want to build 380,000 new homes a year across the UK, which includes 150,000 social homes. They want to expand neighbourhood planning efforts and introduce a use it or lose it planning permission system for developers. Reform wants to review the planning system, reform our social housing laws, scrap Section 24 for landlords, and do away with the Renters Reform Bill. Elsewhere, they also want to offer protection for leaseholders and incentivise use of new construction technology in an effort to get more houses built. At the time of this recording, it still remains to be seen how voters and investors feel about these plans. What we should all remember, though, is that actions speak louder than words, especially in the political scene. We see many manifesto pledges made over the years, but not all of them have been stuck to, so it's important to keep an eye on whoever the next government is, what they do after the vote. Regardless of the result, the property market will likely march on. Research from 20EA found that not only has the property market's activity proved steady since the election was called in May, but it is also actually sitting higher than it was compared to last year in terms of demand and supply. Looking at the data across the 14 days following May 22nd, when the election was announced, it found that the number of properties sold subject to contracts was just over 51,000. A rise of about 9% from 46,802 from the same period in 2023. And this growing confidence can be found across the economy. Analysis shows that most landlords plan to retain their portfolio sizes regardless of who wins following the election, as opposed to, sell off. And we know that no matter what happens, the housing market itself, the residential housing market, should be fine. Compare My Move, the comparison site. They actually recently analysed data from the last 7 general elections. And what it found was that house prices tend to rise in the 12 months following a vote by an average of about 4.6%. Again, regardless of who wins. Similar results from The Independent and Nationwide found that elections themselves don't cause volatility in prices or shift overall trends in the market. So where does the economy sit in the lead up to the general election? Well, things are steady, shall we say. UK inflation has finally come under control. We finally hit that 2% target. The Bank of England kept the base rate unchanged at their most recent vote, but at least they didn't raise it, and everyone's looking and hoping to get that base rate down. All the house price indexes from June showed steadiness. Halifax recorded that average house prices were slightly down at 0.1% in May compared to April. Rightmove quite hilariously recorded that the average house price fell by £21 exactly. Zoopla, again, house prices remained flat in the 12 months to May 2024. Arguably, though, the most reliable indicator comes from the ONS, which uses land registry data, and it showed in June that house prices in the UK have actually risen annually by 1.1% and are now sitting at £281,373. Just a reminder, we're not advisors. We will never tell you where, when or how to invest. But location-wise, if you do want to try and benefit from any post-election price jump that may occur, you may have luck in places like Yorkshire, maybe Hartlepool, and the southeast of England. Reportedly, according to the Open Property Group, prices in these areas have actually dipped a bit over the past year. Could be an opportunity to bag a bargain there. So that's it. So next time you hear from me, we'll know which party was fortunate or unfortunate enough to win. I imagine much of what we'll cover in the next update will concern whoever's in charge, what the commentators out there will have to say on it, what it may mean for the property market. But I'll also try to bring you relevant insight that may continue to slip under your radar among all the chaos of, all the political drama out there. And of course, remember, I'm still happy to go over any concerns or news items that you'd like to see covered. If you have any ideas, thoughts, critiques even, we're all ears here at MFS. I'll see you in a few weeks, and thank you for listening. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.